It's not a bad thing to go slow, but in order to go far, you have to go slow. But once you understand the process, take the time to go a little bit faster.
That said, thinking about scaling up, given kind of what's going on a macroeconomic standpoint, inflation's at an all-time high. You're talking about pending recession happening. Is this the right time to be investing in real estate? Like, do you think this is still the right time to get in, and this is a good wealth building, opportunity at the moment? Is it worth waiting? Like, what's your take on all that?
Yeah, it's a good question. So I'm asked quite often of what I personally think. Like, should people jump into it now or wait for later? And I think there's an old adage called, what is it? Time in the market is greater than timing the market. And I think that's very true. The best time to plant a tree is yesterday. The second best time is today. And I think in the game of real estate, it's incredibly impactful to buy and then keep buying as much as you possibly can.
Definitely. And on tax benefits, I think that's something that I don't understand as deeply as I'd like to. And I know there's a lot of tax benefits that come with owning real estate. So, from your perspective, what have those been, or what are they, and like how have you leveraged those tax benefits in your own business?
For sure. So I think the tax benefits in real estate are monumental. And this is my general disclaimer that I'm not a tax professional. Seek professional tax help if you'd like one. This is for everybody watching this. So keep that in mind. But I think the tax benefits with real estate are absolutely incredible. And so you have four major components of the tax benefits. So the first one is you have appreciation, then you have depreciation, you have equity paydown, and then cash flows. And then you'll also have some of your general tax write-offs that come with that too, which is pretty amazing. So for each one, appreciation, very standard. Like generally these homes are going to go up over time, especially if you're finding an area that has a lot of population growth or commercial growth. Appreciation is almost guaranteed. Now, with that being said, appreciation is icing on the cake. So don't bank on it, but it's very likely going to happen. Depreciation, you're generally going to depreciate all of your structures, your properties across 27.5 years. That depreciation is very nice to have, as well as when you're buying a property and you need to say, replace the roof, replace the AC, the floors, whatever it could be. This is how ultimately at the end of the day, when you're doing all of these renovations or buying distressed properties, you're going to pay little or no money in real estate taxes. Like on cash flow, obviously, if it puts cash in your pocket, that's the name of the game. The cash flow is what's going to allow you to hit true financial independence at the end of the day. Mm-hmm. It's allowed me across my 13 properties to get to the point where I can tell my boss or other people, I don't need this job. I choose to work here. Like it's having that gentle, very gentle sense of like, fuck you money, but like not being an asshole about it. Right. And then people like, whether you like Donald Trump or not, when they're reporting of like how he pays no income taxes or no taxes on all of his real estate holdings, that's generally how.
That's incredible. I'm by no means a tax expert. I know, we didn't cut our teeth in tax growing up, but do you have like a CPA who handles all that for you, or some guru who knows all like the rules and how to get you the best bang for your buck with that?
Yeah, so I do have a CPA, and I started having a CPA, I think, after my first property. I think it's important to have a relationship with a CPA so they can give you some general advice and strategies for managing some of these properties. Just like what I'm saying as it relates to maybe 1031 exchanges or bonus depreciation or cost segregation studies, they can give you a lot of tips and tricks to get started. So even though I have a CPA, I'm still doing a lot of the work myself because I want to make sure it's done the right way. But it's nice having a CPA to say, this is how you actually depreciate this. Here's how you can make this be a little bit more beneficial for you.
What in your personal opinion, and you're not an CPA or an advisor or anything like that, but just like, how do you think about business structure when you go about building this real estate empire? Is it one LLC? Is it multiple? How do you see it?
I think for most people, they, at least starting out, they get a little confused on like, how do I structure this deal? Do I put in my name? Do I put in an LLC? Do I put in a trust? A lot of people get really confused. I think the best way starting out is going to be this. Buy a property in your name specifically. Then from there, get a $1 million or $2 million umbrella policy, enough to cover your net worth and more. Mm-hmm. And generally, you're going to be fine. That's my philosophy. I will say full transparency across the 13 properties I have. 12 of them are in my personal name.
Mhm.
And one of them I bought in my personal name and then later moved into an LLC with the
Okay.
permission of the mortgage financing company. So the point in time when you're starting out, it probably doesn't make sense to get like super into like the LLCs and trusts and all that stuff. Once you get to a point where you probably have, I don't know, 5 to 10 properties, or you might be cash flowing like say $10,000 or more dollars a month,
Mhm.
you might want to figure out and talk to a qualified legal expert of saying like, how do I structure this? How do I want to segment these? Maybe 10 properties. Do I want to have maybe 4 LLCs and then move a couple of them? Or whatever you want to do.
Here comes my dumb question.
No dumb questions. No dumb questions.
Umbrella policy, only because I have no idea what that is. I've never gone through the process of buying property. So
Yep.
what is it and why is it important?
Yeah. So an umbrella policy will cover you for just about everything from a liability standpoint. So you'll get an umbrella policy from your auto policy itself. So now I'll first explain what's included in the umbrella and then how you continue to get it. So for the umbrella, say if somebody trips and falls on one of your properties and they try suing the tenant or yourself as a landlord, it would cover you for that. If somebody has a tenant with a dog who ends up biting someone, it would cover you for that. If, say, you have a light fixture and it falls on someone's head and they try claiming that you were negligent as a landlord, you have the umbrella policy to cover you. Now, umbrella policies also cover you for things like slandering someone online. It can also cover you for, say, if you're in your car and you hit someone, it's going to cover you for the additional liability on top of that too. There's so many potential benefits of umbrella policies that people don't generally give a shit about, but it's such an awesome plan that I think anybody who is in real estate or anybody has a high income, highly recommend it. Because if you get into a judgment where maybe someone trips and falls and breaks their skull on your property, or you hit somebody in your car, they can garnish your wages in the future. They can deplete all of your assets if they choose to, and if there's a big enough case, but they can also garnish future wages, which just makes your life
Yikes.
awful.
Yeah.
Now, from like how you get this, you're going to go to your auto insurance policy and say, I want to get an umbrella policy. Now, most people in Florida probably have 100, 300 insurance, more or less in that range. They're going to increase your minimum policy on your auto. So it's going to be like 500 on your insurance with comprehensive coverage. And then you're going to pay like an additional $400 or $500 a year for that umbrella policy. And it's going to be for maybe $1 million or $2 million in that range, depending on what makes the most sense. Starting out with $1 million is always best. But you're going to have so much extra protection on your vehicles too, that is going to make even more sense for you. I'll tell you.
I know just from a financing perspective, there are a ton of different ways, and we don't have to get into every single method of creative financing. But let's talk about, let's say one scenario, you do have cash. Second scenario, you might not have the cash on hand. And like maybe a third is you're looking for some creative, maybe it's partnering or maybe it's some creative finance. I'm not entirely sure, but from my understanding, if you do have the cash on hand, you can put 20% down for an investment property if you are not planning on living there, or like if it's an investment property. If you're planning on living in a place, you could put down 3.5% for an FHA loan.
Yep.
Is that correct? And Is there any way to do FHA loans not living in that property, or is there any to just get reduced from putting 20% down on an investment property?
There is, yeah. So if you're going to be living in a property, you can get into it as low as 3.5% down. Now you will be with an FHA loan, you will be paying PMI. And so I think your target for that is, if you're going to be getting into it, make sure you do your proper due diligence and make sure that the numbers make sense. And ultimately at the end of the day, you would probably end up refinancing out of that anyways, maybe within, I don't know, maybe a year, maybe 2 years. Assuming interest rates drop and property values continue to go up, you should be able to remove that PMI pretty easily and lower your overall payment. So I think that's the way for primary. I think for investment properties, you can do it a couple of different ways. If you're buying a multifamily property as an investment, you're going to be putting down 25% no matter what. Like that's 25%. If you're buying a true investment property, duplex, triplex, quadplex, you will put down 25%. Okay. The only way around that is if you're going to live in that house, that multifamily yourself. And then you can put down that 3.5%. Now, you can put down as little as 10% for some of these secondary, or investment properties as well. So those are also worth considering. Higher interest rates, you might have PMI associated with it too. But for the most part, you're probably going to put down 20%, especially for some of these investment properties you're looking at. Now, you could always do a secondary property, buy it as a vacation property, put 10% down, and at that point later on, potentially Airbnb it out. What I interpret, and I'm not a mortgage expert or a lawyer by any means, but from a secondary property / vacation home, the main thing is making sure that you don't have a long-term tenant there and you don't have a property manager there. So if you use that for personal enjoyment and then you also decide to Airbnb some of it out, that's generally okay from my interpretation of it. Okay. So it's something to consider. And again, talk to a mortgage expert to make sure that you do this the right way. But there's a lot of different flavors for how you can get into this, whether it's a primary that you're going to live in yourself, a secondary, or an investment property. A lot of different flavors. Don't get yourself overwhelmed with people saying like, I have 60 doors and I'm only 24. Like, dude, they might be investing in like Iowa where the standard house costs like $50,000. Like, big difference.
Yeah,
definitely. No, that's a good point. It's a good call out. Because I mean, you see a ton, and that's just kind of goes back to like the noise. You see so much noise out there. It's like, who do you trust? Who do you believe? And so, yeah, it's nice to talk to somebody who actually knows what they're doing. I actually know and trust. So that's I know we're right up on time here. So last question.
Yeah.
Looking back, I think you've been investing in real estate for what, 6-7 years or right around that time?
Yeah, about 6 years. I think I bought my first property in 2018. So I guess that's actually 5 years.
5 years. Yeah. So 5 years ago, looking back at 2018, Greg, would you tell him anything different? Would you do the same exact strategy, or was there anything crucial that you think, you would have wished you had known when you got started?
Yeah, it's a good question. I think if looking back to when I started this, if I had to give myself any advice, it would just be like, run your numbers properly and don't be scared to make mistakes. I think starting out for me and for others, you might be thinking to yourself, oh, what happens if this goes wrong? What happens if I don't get a good tenant? What happens if I need to evict this person, or this renovation goes longer, costs more money? Shit happens, but you have to think to yourself, I'm happy to be having these issues as they come across, because you're a very small group of people that can have these type of issues compared to other folks who are maybe having to deal with like literally getting food on the table, like being very real. Like it's super hard for people out there. Looking back, I was so focused on having control in every deal that I had that I wanted my personal name to be on the property. I want to deal with my own shit. I want to make sure that if it was good or bad, it fell on me. But looking back, it's not a bad thing to go slow, but in order to go far, you have to go slow. But once you understand the process, take the time to go a little bit faster.
That's awesome. No, Greg, this was incredibly helpful.
Totally.
I feel a lot more comfortable getting in. I'm still going to listen to you recording, walking me through the analysis paralysis.
All the podcasts. And I think also too, because we all always say this, but like you gotta at least start, even if it's ugly, because it's just analysis paralysis is it's frustrating, but we haven't even gone to the point where, we've bought anything.
Right.
Awesome. I really appreciate your questions today. I'm looking forward to the next session, and I hope for those watching, you find this beneficial. If you have any questions, feel free to follow me. My name is Greg Cullen with Leverage Hustle. We have Dennis and Val here. Thank you again for coming today, and we'll see you next time.
See you guys. Thanks, Greg.